Okay, just give me a second, my main man, and we shall get going. If you got questions, by all means, please ask away. Glad to be here. I cannot talk as I am at work. Not a problem. Don't worry about it. Let me just get back to, okay. So I think we got everything up and running now, which is good. And hopefully just do a refresh of my other system here in case people come aboard. Yep, we're live on YouTube. Hooray, hooray, hooray. Okay, first off, we want to make sure we see my screen. So if you could just let me know. Okay, this is just a slight delay between myself and YouTube. That's okay. So I'm gonna make the screen available. I'm gonna share it. Just let me know if you see it. I could see it even myself on YouTube, so you don't have to even worry about getting back to me. Okay, so let's get started. How y'all doing? Welcome. All right, so let's get down to everything. So I could see my screen, which is good. Hooray, hooray, hooray. All right, let me know if you could see the screen by the chat. That'd be greatly appreciated. I want to make sure I'm not talking to blank screens. So I'm going to bring up a spreadsheet. Just wanted to let you know I'm currently running my strategy against Binance cryptocurrencies, 315 pairs. And I'll show you the strategy right now. This window right here, oh, I just bombed for whatever reason. I'll fix that later. So my strategy is not running. Been going through quite a number of changes. So it's not very stable as I make changes. Anyways, here's my database of the different, call it tables here. This thing grows. Right now, up to a point we're at 87. I have a risk on assessment here that we'll do a weighted average of these values of the current price. And it looks pretty good, but we want it over 1 to start trading. All right, so let's get to it. So I run this quite a bit now, this strategy, about, I'd say at least 12 hours a day. This is what I woke up to on the 29th of September, which was, I think Saturday morning, Friday night, Saturday morning. This ran my time, Eastern Standard Time. And this is what we woke up to. Now, I purposely wanted to have it run as much as possible. I've tested it with a lot of constraints. And we'll go through the timing, as I call it, on this strategy, the optimal timing specifically. It's very important. So what we have here is I'm just taking on one small position. So we have our date, time, symbol, or the pair. Right here, in this case, it's CMT, BTC. The closing price, this is when it took on a position, and also closed or exited the position at this percent, moved up, rate of change percentage, ROCP, and that's since the entry. So when the entry was put on, the price had moved up at 4.21% with a P&L of this, okay? So one big thing I factor is volume. It is a huge factor on taking on these smaller types of trades. These are all negative, as you could tell. We did okay here, did okay here, and we did okay here. But my system is very tight where it doesn't want to take too many negative losses. Like if it starts to get too high, obviously I'm not going to make money for the day. And I'm going to be over time measuring this over 24 hours, midnight to midnight. So in this case here, we were up 5.45%. As I said, if you got questions, just let me know. I can gladly take them. So right now, one thing I want you to be aware of, this is really important. This was a pretty well a perfect day. Very first position at 1:06 a.m. on the 29th. We took on a position, market was red hot, and we made a 4.2% up move. Now, as you can see here, as this strategy continued to run, it started taking losses, which we don't want. Then it took another profit, and it bumped it up to over 5%. Something like this. Took on more losses, made some more profit, and then more profit, and I just started kind of losing money. Now, I don't know how about you are, but is it worth, as I've said this for the last couple of weeks, is it just worthwhile start up my strategy at midnight, hope that the market's hot, take on the first position, and just close down for the remainder of the day until you wait till the next day at midnight again? Because when you look at these positions here for the remainder of the day, I'm going to be honest, it was not worth taking over from 1 a.m. till 7 a.m. these extra positions, because you're increasing your risk of losing this profit that you just earned on the very first position. It's been my argument all this time. I've talked to numerous people, gurus and whatnot, that's pretty well what they do. Is they set a daily target, maybe 1 or 2%. You could probably set it higher in the world of crypto. Once you achieve that daily target, shut down, wait out till midnight, and then start again. So you don't need to take on these extra risky trades where you could either lose this value here of that profit. For what risk is it worth? I don't think there's any. And maybe in this case, we only gained an extra 1%, which really we lucked out. And from my testing, usually when you trade like this, you're going to lose money. You make your trade here, set your target, shut down. And that's what I call optimal trading. Here, it's not worth taking these on, as I said, for an extra percent. Chances are, if you trade like that, you will not only lose this profit here, 4.21%, but you could probably end up negative after this run up of crypto for the asset class. Not worth taking on the position. Okay. So that's my whole argument here, is to just shut her down. Now, I have instances where cryptocurrency oscillates throughout the day. As I said here, we have this crypto risk where I measure the big 5 crypto coins, Ethereum Classic, Ethereum, Litecoin, Bitcoin, and then Bitcoin Cash. Those are kind of like the 5 largest. I mean, it could change here and there with XRP or Ripple, so on and so forth, but that's good enough to get a good measurement. All right, so knowing that, let me just see where it's at right now. I have a script here. Okay, let me show you the first one. So it's called Risk on 3, Python. So it goes out to CoinMarketCap, does a measurement on those percent moves over the last 3 to 6 hours. You can see here, everything's gone negative now, okay? So my strategy won't trade. It's too risky to trade. We are probably in a falling knife environment. So if I look for the weighted average of these 5 pairs or coins against the US dollar, what you'll find here, this is how I calculate the weighted average. So here's our weighted average of negative 0.5%. So you're better off to wait it out, as I said, to when you have a weighted average of these combined pairs when it's over 1%, because you're in a very strong upward momentum that chances are you're going to get a lot more positive and more profitable positions. So that's what I've been arguing. That's what I've been saying. But as I said, this oscillates. Now, this could oscillate for 6 hours in the negative. After 6 to 8 hours, it'll come back and it starts to go profitable. And as it oscillates, the momentum builds. that weighted average at some point through a day over a 24-hour period. Usually it will exceed 1%. And that's what I'm wanting for. And once I get that, then it will allow my strategy to go into trading as it did here and hopefully get one position out of all of them while it's trading to break a daily target, 1-2% move, maybe even 3, and not take on these bad trades. So that's 9/29, September 29th. Any questions so far? Okay, we got a total of 4 people watching. Appreciate you watching. All right, if you got any questions, just type them up as we'll continue. All right, so that is for the 29th. So earlier today, I woke up to another bad situation. This is typical trading, very random walk. So unfortunately, I didn't generate the spreadsheet that I wanted to generate, but I could still show you in this log. I've gone on about these logs before. Check them out on my YouTube channel, Quant Labs. And just so you know, they will go private fairly soon. Be part of a new course I'm working on. So what I'm going to do is I'm going to look for the phrase here, a key phrase, close exit. So here's the time. Today's October 1st, 4:38 in the morning. Again, I'm Eastern Standard Time. What happened was this strategy, the algo, took on 1, 2, 3 positions all at the same time. How do I know? When you look at the closing position at 438 right here, and again, 438, it took on all these 3 positions at once. Here's the problem. When you look at the rate of change in percentage when it closed out the position, this was the original, this was the closing price right here. I do measure stop loss, but because I've immensely improved my exits, I'm using this guy right here. So you can see here on the rate of change since the original entry and closing it or exit, we're down -1.3%. Same here and same here. So we took some heavy losses. The problem is here, PD is a period. That is this goes minute by minute. As soon as it puts on a position, it checks the minute data as the position and the market data for that crypto pair comes in. That's IOST Ethereum. And we measure minute by minute, and that's what this PD is. So if it's 1 minute, it's PD1. If it's a second minute, obviously this will be PD2. This can happen quite a bit, and it usually will work against you very quickly, especially in a very fast-moving environment like cryptocurrency. And within a minute, and I check to make sure everything's positive, the momentum's positive, as well as the RSI is very high, and there's like extreme buying on this pair, which it was. But the problem is when you take on the entry, at what point is that momentum, that spike on? Now, in this case, I think what I made it happen is I taken on 3 positions in the spike in the later stages of the advancement of that spike for this crypto pair, IOST Ethereum, in the very last stages. And within a minute, I lost 1.38. As soon as my system sees that, a certain trigger, it closes the position. And it was too much where those positions were pretty excessive, 1.38, 1.38, 1.38, which adds up to, let's say, 4%. So I'm already down 4% in a matter of a minute because it took on the bad trade. I'm going to talk about doing this, how I could. I've learned a lot from this today's session on how to trigger not taking on these very bad trades. But here's what happens. So you see here at 4 in the morning, the cryptocurrency market was up. Had to been up at least 4%, at least 1% for the entire asset class using that weighted average. Wakes up again at 7:44 in the morning. Look what happens. So in this case, it woke up put on a position, 7:44 in the morning, exited on XLM BTC. The rate of change is again negative within that minute, down 0.67%. That's still too much to me. And then it also at 7:44 took on another position, Loom BNB, and that was down 0.54%. Okay, so I'm going to be down by this level between when it woke up here, 438, 744. I'm already down about 5%, roughly, maybe 6%. We don't want to have trades like that. It's not a good situation. But here I got lucky again. So when you look at this XM EM BTC, I was up 0.93. Another position was taken on at 0.93. And no, actually, I'm sorry. We're going to look for a close and exits. Okay. Just give me a second here. Okay. So here, 1 minute passed or 2 minutes passed because the period's at 2. So now we're on a third bar, third minute. And you can see that we exited and actually made some money here. It's the profit. Here we're up. What's our rate of change pace? So we're up 1.006. We got 3 of those. Okay, since the original price of the position. So we had to wait 3 minutes, but here's the key. We went up on the second minute, up 0.33, and here we're up 0.93. And you can see between the 2 minutes that we went from 0.93 down roughly, actually down 0.6%. And then the third minute, we came back and closed it out at 1%. That's a target, that's a trigger, that's the time to get out, and that's what happens. So we made a little bit of money there. Okay, and that was roughly at 8.25. Okay, so this was a key learning point from today. I'll go in that in a minute if you want. Here we took on another position, closed out 8.25. 10 minutes later, we take on a position of 8.30, 8.36, same pair, XEM BTC. This is very active, obviously. What's our rate of change right here? It's up 0.13. And it looks like we've got how many other positions? So it's only taken on one position, it looks like. Not a lot of movement here, only up 0.13, 0.199, 0.25, 0.19. Closed out here. And we made a little bit of money again because we were up 2%. So we got lucky there on that move. So you can see once again how fast from the 5th minute to the 6th minute it moved from 0.199% all the way up 2% in a matter of 1 minute. And we closed out. Now there's a lot of luck here. Thanks for the like. And then we've got here a loss on another XEM because it's so volatile and moves so fast. Look at this. So on the very first minute, it went down 2.4%. So I had a position put on. All the metrics look good. The indicators look good. The tests look good. So put on the position because it passed it. But within the first minute, it was down 2.4%. And this is the dilemma you have regarding timing of when you start up the strategy and what I call, well, probably some will call overtrading. In this case today, we closed on a lot of losses, as said, originally down at probably negative 5% with these 3 positions, XEM, BTC, IOS, Ethereum. And the first 5, I believe, went down negative And then we got lucky with this XEM BTC, and it brought back the net loss from down 5 to negative 1%. And again, you don't want to trade like that because it's too random. It's not consistent. It's not the way to trade. So when we continue looking at this, here we got lucky. I'm sorry. Yeah. So we've already looked at that one. Okay. So there's a couple of lessons to be learned here. First is when you take on a position, you got to make sure it meets a set of criteria before it goes bad. Because if it does in the world of crypto, it will go bad, and you can lose 2% in a matter of a minute once you put on a position. And that's all random. It's not driven by anything else but just price and the random moves. Even if somebody was trying to manipulate it, you're just getting in at a bad time. So you have to prevent yourself from taking on those positions. And the lesson for me that I took away from out of all of this is you got to look for trends. And comes back to what I said when it comes to debugging these things over time. You look for patterns, you look for consistency. Because I have here, I don't know, we've got two days worth of stuff of trading. We've got this day, the 29th, and then we also have the opposite of what happened today, October 1st. So we got to start looking at patterns. I've gone through that, how to do it. But the clear one that stands out is a lot of these negative losing positions are very volatile, meaning they're up 1 minute, next minute they're down, next minute they're up. What we got to ensure is when we take on these positions is that there's a historical amount of time of where we have solid positive momentum. One thing I could say about this strategy right here, using this weighted average, I will safely say it works 100% of the time in the way the market oscillates. I don't doubt that. But I'm also looking for the same statement that I can say about here when I take on positions. I want to have absolute 100% certainty, or I'll say even 90% certainty that positions I take on will win and meet certain criteria. So, as I said, when you take on a position, you need to look for certain things as you take them. And when you lose positions, you have to analyze why it lost. Usually one of the first things you got to look at is momentum. Momentum says a lot, and volume says a lot about that crypto pair. Over time, when you start looking at cryptocurrencies, I could probably say the same thing about any asset, but with crypto, it's very fast moving. And because of that, you can learn very quickly. And how wide these swings are, you can learn a lot from this. So when you look at the winning trades from the ones I just showed you, you can quickly see that momentum and volume are the two biggest factors here. If you have a pair that is very volatile and there's any negative bar or where you measure a minute and that minute has a loss, I would not take on that position because it tells me that you have a volatile and a choppy cryptocurrency pair that you shouldn't take on. You really only want to take on cryptocurrency pairs that are positive, that has no negative movements over a certain amount of time. So usually that certain amount of time is when you're watching these pairs, you know it's oscillating, you know it's going to come back, and once you hit that 1% up weighted moving average, I can guarantee you positions you put on can, not will, but can do well. So from what I'm seeing, a lot of the cryptocurrency pairs are correlated. So when they're correlated, if you look for other cryptocurrency pairs that match all your criteria, you want to look for all the ones only that have consistent positive momentum. consistent positive rate of change between, let's say, minute by minute, no negative. If you have negative at any point, you're probably going to be taken out of a position that will go down so fast that when you try to catch that negative move, it's too late. You're going to be closing out on a negative position, as I showed you earlier. And that's the consistency that I saw today. Not only that, but you also, when you measure momentum, measure rate of change, measure, even if you do a regression, you want to ensure that that slope of the line on that up price movement is a certain percentage. I'm not going to say what it is, but it's going to be a pretty high number. You get that number, that parameter, you know it's consistent, and chances are it's going to stay profitable. So when you put on the position, and as I showed you, some of these positions are held on for as little as a minute, 2 minutes, 3 minutes, and you close out. And you're probably going to say, well, golly gee, if I know the position is going to go up and it's going to move up 3, 4, 5, 8% in a short amount of time, why would you not let it run? You can, but as I've shown you before, this is where the fear and greed comes in. Because when you look at your logs with the greed in mind, from what I've seen, cryptocurrency moves so fast, so quickly. And the problem is that because of that, it can move very quickly up, but it can also move quickly down. So you have to be very conservative with your targets, your up targets. And once you know that your up target is on a position, you take profit no matter what. If it hits 1, 2, maybe 3% on average, and you close out the position regardless of if it runs up to 10, 20, 30%. You shouldn't care about that, because what will usually happen from the law of averages, I call it, was what we all call it. Usually if you hang on past your target and the position does move beyond your target, chances are with the law of averages, it will go negative. And you will lose maybe even your target. So that's why I say stay conservative, stick to the rules, and be a disciplined algo trader. As a human, it's a lot easier to get sucked into the fear and greed. But if you continuously stay disciplined, you can do pretty good. And chances are, if that's the case, you will make money consistently. And that's what you want. You don't want to get caught up in the volatility of the markets with crypto. As I've shown you, it can move very negative. So that's the key. And you only take on positions that have a very solid momentum, as I explained before, using, I don't know, rate of change, regression, or momentum. If you're using a library like I do, like TA-lib, I will tell you it gives the same number. So any of those three will work fine. So that's the key to what I'm learning today. Any questions or comments so far, either on the YouTube or on the Zoom? I could shut up for a while, but that's what I'm finding. And that's why I'm not going to make this video playback, because I don't need the world to know it, but I'm, consider yourself rewarded by listening to this, because it seems to work pretty good. Now, here's the other key. I talked about fear and greed. As I said, crypto markets, using this right here, this oscillates. These averages oscillate in these pairs, okay, or on these coins. So if I look at this now again, not much changes, but if I waited it out, let's say 3 or 6 hours, these price movements will be totally different. And then my weighted average may be over 1%. That's what I'm looking for before I go into the market and start trading to get those positive moves. So it's kind of like fishing. You put your rod out, as you're doing here. You run your script, you do the measurement on these cryptocurrency pairs, and you just wait it out. Because when you know that the pairs, these 5 big pairs or 5 big coins, once they hit that weighted average, then you go into trading. It's kind of like that's where the fish are. If you don't do that, what will happen is you're going to take on a lot of losing positions, which you don't want. you're not going to meet your trading goals if you set a daily target. So that's why I say daily target, daily target, daily target. Once you achieve the daily target, shut everything down, be happy, and wait it out and start up your strategy midnight, next day, a new day, new trading day, and do it over again, repeat, rinse, and recycle. Simple as that. Because here's what I'm finding. You want to, when this weighted average starts to come back where it becomes positive, then it becomes positive 0.5%, then 0.75. It can still dip. That's why I waited out until it hits 1%, because then I know we're going to get a lot of positive momentum. And that means positive, profitable positions. So when you trade like that, you could probably get 2 days worth like that, or sorry, 2 trading, call it sessions like that in a 24-hour period. I've seen as high as 3, but you at least get 1. And if you watch a lot of the pros, the gurus, even if you know anybody who's successful, you'll watch them. If they're a stock trader, they'll open up 9 a.m., trade for an hour, hour and a half, tops 3 hours. They don't go beyond that. Why? Because they know they have a daily target that they want to achieve percent-wise or dollar-wise or pip-wise. Once they achieve that for the day, they shut down and they go out and live their grand life on the beach or whatever. Do it again next trading session, starting time at 9 a.m. That's what the traders do. And that's why they only trade for an hour, max, usually hour and a half, maybe 2 hours, tops, because they reach their daily target and they move on. And that's all they do. So if you have a system like this where it wakes up at whatever time you want, 8 o'clock a.m., midnight, whatever, usually at some point, the market, the cryptocurrency market will come back within that 24-hour period and hit your 1% weighted average of these pairs that you're looking for, usually. Now, this is a trend that I'm seeing. It could be temporary. It may be forever. I don't know, but that's how it is right now, where I can say that majority of all the crypto pairs out there are correlated to this move. I say that with certainty now. And now I'm also trying to find ways not to take on the negative or losing positions, as I said earlier. Because if you trade outside of these trading sessions where your weighted average of these 5 pairs are less than 1, chances are you're going to take on a lot of negative positions. And again, you won't achieve your goal. So anybody got any questions? That's all I need to say for tonight. I'm hoping to close it out so I don't have to talk about it any further. And we'll see how my strategy does over the next few days with the new fixes I got to prevent these kind of losses from today on October 1st. But I'll be testing these as I go, making sure I don't take on these losing positions. Anybody got any questions or comments? I got both the chat for my YouTube up, and I also got the Zoom as well. So I'll wait it out for a little bit. If there's nothing more to be said, I'll close down for tonight. I'm not sure when the next webinar will be happening. I will let you know as a marketing thing. We do have trials now. I'll just put them up. If you are interested in these analytics, let me show you. If you go to my website here, quantlabs.net/blog, I have, you may not have seen this. You will see these, what I call notification bars at the top. There's a red one and a green one. There's a green one right here. You can just click on the read more. I'll tell you what they are both. Okay. So the first one, all these metrics I'm showing you, I have numerous people that want to get into trading to build an algo trading system. They quickly realize that they can't do it. So as a result, they want the signals. I provide that for them through this service. If you want to try it out, it's a big price of $37 US. no retrials, no rebilling. You just put your payment via PayPal once. You don't have to worry about, you're not signing up for anything. It's just a one-time charge and that's it. Okay, so if you want to try it out, there's a lot of stuff in here with the cryptos that I'm showing you. It's pretty solid so far. I'm very happy with it. I put on the every hour, this thing right here. I think alone for that price, it's worth a lot, because when you go to CoinMarketCap, you're only going to get, if you go to CoinMarketCap, and you may have seen this in my past videos, usually here it's only a 24-hour change. Here, this is kind of like 3 to 6 hours. It's more reflective, more realistic. And I will tell you, the opportunities I see are only intraday. I find it very difficult to trade end of day because of the volatility is so crazy. If you're in the Bitcoin phase where it was just nothing but up and up and up, yeah, you could have done well there. But here, it's up and down like a yo-yo, very difficult to trade. But with these, with this script here, where I put on these averages as well as the weighted average every hour, you just wait it out until you start seeing it come back to 1%. Then you can start going in the trade. So I have that. I've got some other very deep analytical reports. If you want me to show you one, I can do that. Right here, I've got charts that show trend, or based on trend and based on volume. If you go into my database here, I have a watch list. Remember, this is actively watching right now, 87 pairs. And I've had this go as high as 500-600 pairs. No human can trade like this, but it will analyze the markets, and then I'll show you what it's looking at. And it does this in parallel, but I've designed it in a way where it's very simple. So I'll show you the first one here. Okay, so here it's a Word document. So it's now I'm working with Binance Exchange, so I can only do long onlys. There's no shorting. Here we've got some pairs that are buy signals based upon just pure longing and based on a certain criteria for volume, where it has to be over 40 million. So these are the pairs that it met. It sorts them by probability of doing okay. So I'll just show you one. So here we have this pair here sorted out by ZIL BTC. What I do, two things I look for, depends upon your risk profile, what you can and cannot take. If you want to trade with danger in mind, you can definitely trade based upon volatility. This is standard deviation. And for this group here, what I do is I'll measure the group mean here, the entire group, and that's the volatility. So it's at 0.1%. We also do a comparison of the volume on average for whatever pair on the volume. So as I said, I'll just show you the first one. Let me just get rid of that. So here, this is the volatility, ZIL deviation, 0.06 comparatively is lower than the 0.1%, so that's good. Our volume is quite a bit higher, actually not as high as the group at 400 versus 72 million. Now, also one thing I want you to understand is I use Fibonacci for value. Is it worth buying into at this price currently? And the answer is yes, because it's in what I call the golden zone. I'll show you that in a minute. So what I've got here, I got numerous charts, and some of them include things like buying signals. You can learn a lot from this, because when you see a buying signal like this, and then that very short timeline, you can quickly see here that this would have been a good move. You can see overall since May that this pair has been beaten down so much, but guess what? We got a buy signal right here. We also measure trend lines. So overall, it's not very strong. The trend is negative. And again, we have the Fibonacci lines at different levels. Historically, you can see here, there's not much movement. That's why the Fibonacci levels are very, very, very tight. But there may be some opportunity here on an intraday level. Now, this is a statistical daily return normalized distribution. You can see here it's been more negative daily returns. But on average, it's kind of skewed towards the positive. Not much, but it's skewed towards the positive slightly, I would imagine. Here's if you were looking for wedges. I'm not going to get into that in too much detail. We've got here moving averages. This is where I learned about RSI right here. This is what I loved about RSI, because usually you can see right here, you got a nice couple of up moving bars right here. And that's why I use RSI consistently. And it moves up, the wicks move up. Just right about there, it drops off and you would kind of lose, not money, but you would, depends when you get in this point right here. You can also say the same thing about shorting as well on a negative, but because I'm in Binance, I can only long. So one trick I just learned a few days ago was comparing RSI against momentum. Momentum alone is obviously, you want to have, as I said earlier, positive momentum. This chart shows it. Now here it's, I think this is a monthly view or daily view. And you can quickly see here, just on the volume, this huge negative bar up. Right there would have been just the perfect time to get out. And that's just pure classic RSI, people piling in, algos piling in to drive up the price. And as I said earlier, that's how I trade, but you got to make sure you're trading at the right point. You get in at the right point, because what will happen is it will eventually taper off. And when it does, it tapers off fast. But as I said, you can use this positive momentum to prevent yourself from taking on those negative positions. So you can use this momentum as one of those factors. Here I break it all down. This is a 180-day look back, or window as I call it. That's kind of close to 6 months. This is 90-day, and you can clearly see. Here you can use the different moving averages as a way to confirm entries and exits. Because the EMI in purple, everything's lower, you know it's undervalued, it's been beaten down. But on the intraday, if you can catch these kind of moves, that's the nice thing about intraday moves. So moving along, here we can look at a 30-day look back. Now, let me just see if we have any harmonics. I use harmonics and candle patterns as well. Trying to find you one pair. Now, one thing I should mention about the Fibonacci is right here, you can see the Fibonacci on the 30-day view is really opened up the Fibonacci levels. Right here, traditionally, these moves move in 3 points of contact against these various trend lines, which is equivalent of a wedge or I can't remember the other one. But usually I put here, and I got to work on this, the details of the price. These are the uptrend, downtrend. So as I said, everything's in point of contact 3. So it will, on this one right here, say maybe 1.3 here, maybe a good entry point. Can't confirm it, but that's something I'm wanting to work on. Again, you can see the RSI here. seems to work pretty good. I'm just going to try to find you some candles. Let me see here. I'm sure I could find a candle. Let's see. Okay, there's not many candles here. Okay, let me pull up the other document. All right. So you get all this stuff for this little analytical service. It's pretty cool. So if I pull up the other document, it's the same. The only difference is it's sorting everything on trend. So in this case, we have some buying signals for both NEO, BCH, and these other ones here. So let me see if I can show you some other neato things. Doesn't look like I find any candles here. Yeah, you know why? Yeah, because the time when these charts were generated, it was during a downtime. But usually when I do see an up market, you will see in this report automated head and shoulders, you will see harmonics, and you'll also see candlesticks, reliable ones, especially the Mariposa, that is put in here to hint that there is quite a high probability of a positive move on a position. But there wasn't a lot in these reports here, not in a down market. But that's pretty well that for the analytics service. It's pretty involved. Now let me show you. Okay, so that is for 37 bucks, you get all that plus a lot more. This one is, a lot of people originally have come to me for programming and how to build an automated trading system. I got 3 courses, no rebilling again, no retry. It's a 2-month trial of 3 courses. If you watch this video, it'll walk you through it. And it's like 500 bucks. I used to sell it for 750. It's 30% off. So it's pretty cheap. If you like this, then I'll be consistently adding new courses, not cheap. So those are 2 trial things that I've got on right now. Yeah, so that's pretty well it for now. Anybody got any questions so far? Let me just see how the markets are looking right now. Yeah, see, it's still down. Anybody got any questions or so? I'll wait it out. It's 7:52. My presentation's been pretty short lately. As I said, if you are interested in any of these trials to try them out, all you got to do is just come to my blog here. And then you'll see it's at quantlabs.net/blog. And you'll see these 2 different ones that are available, and it rotates. Just click on the read more, whichever one you want or interested in. Anybody else? Let me see who we got on our Bill and Pradag. I'm sorry if I butcher your name. Anybody got any questions on this? Anybody got any questions on general trading? Like I said, if you're here, congrats, because I'm not going to be making this available to anybody out there in the public space. All the stuff that I put up tonight and showed you is secret sauce stuff. And as I said, it's very, I won't say it's simple, but when you look at it, there's no machine learning, there's no quant, very simple technical indicators, and the math is like 1, 2, 3 equals 3. But it's very simple. It's fast, even though it's in Python. And so far, as I said, the pattern that I've seen regarding this seems to be very consistent. I don't know how long it'll last, but if it lasts forever, great. But everything's all correlated around these 5 pairs. Now with Ethereum, or either dropping off, I've seen it. They drop off and it comes back with a vengeance, that move. But Ripple is another one I should throw in there. And I can always change these up as I see fit. The only reason I'm including these particular ones is because most Forex retail brokers, when they go crypto and build a CFD around various crypto pairs, these are the ones they usually use. As I said, Bitcoin Cash, Bitcoin, Litecoin, Ethereum Classic, and Ether seem to be the ones. But I could always add in Ripple, and it's weighted on volume anyways. So obviously, because Bitcoin's the big boy, that's where most of the weighting goes. And you can clearly see that the volume, the percent move is nowhere as high in Bitcoin versus other ones that are moving faster, like Ethereum Classic. But I mean, I've seen on both ends in the last week where it's down 0.4%, and then 24 hours later, something else comes back at 4%. The moves are very extreme. But as I said, this pattern seems to be very consistent. Just taking that weighted average to measure that. Once you hit one positive one of all these pairs, you dive in and you get in and you can start trading. One of my videos I talked about here, let me just see the one. It's quite let me just see. I'll have to shut myself up when I play this. Okay, yeah, here. Okay, I'm just gonna pull up. Right here. This video here called "You Need to Quantify Your Risk for Algo Trading." In that video, originally, I just was a yay or nay to trade aggressively. Then I said, hold on. If I quantify it, it'd even be more precise. And that's what I did last week. And the trading was much more effective. And you can learn a lot by doing that, by quantifying it. And that's what I mean here. I'm able to quantify the weights with each move of these big 5, and then do the weighted average. And now not only am I measuring, yeah, trade risk on, don't trade risk off, quantify it, because you can see potential patterns. And when I did that, that is when I started to see this pattern. I'm like, holy moly. And then I was able to narrow it down to only trade when it hits 1. And in this video here, you need to quantify your risk for algo trading. For about this length of time, 17 minutes, I talk about the 4 different modes of trading. And I've whittled it down to aggressive, which is at 1.0 weighted average. You can go moderate, which would be at 0.75. Anything under 0.5, I would consider anemic. Obviously, anything under 0 is all negative. You don't want to trade it. You don't want to trade it when it's below 0.5, from what I'm seeing, because it oscillates. And you don't want to take those positions that are so volatile. You take on a position, as I said earlier, it will move against you so fast, and you have no control over that. And it's like a falling knife. You can't catch it. You can't do anything about it. So you need to trade in an environment where it's positive. Look at the momentum's very strong for all 5 of these. Unfortunately, the majority of them are have a very positive momentum. Okay, I'm going to shut up now. Any questions? Any comments? You got questions about anything related around trading, algo stuff, programming, you name it? Go for it. Usually I'll do it going once, twice, 3 times. And if we don't get to that, thanks for showing up here. I do these, try to do them every night. every week, Monday night, 7 p.m. Last week, I talked about the risk. I'm talking about the risk on, risk off stuff. And now I'm more precise with it. It does work. And now we're trying to time it. Anybody interested in oh, sorry, I'm sorry, hang on. Okay, Bill, go ahead if you're able to talk.
Can you hear me?
Yeah, go ahead, man.
Okay, so I came a little late. What is this test risk.py?
Oh, this what I'm talking about is right here. Let me just, you can see this screen, no problem, right?
Yes, I see it.
Okay, so what we're talking about is I do a measurement of the price move over the last 3 to 6 hours of these coins: Bitcoin Cash, Bitcoin, Litecoin, Ethereum Classic, and Ether, however you want to pronounce it.
Okay.
And what I do is I weight the average with the volume over the last hour or so against the price move or the price, and I come up with this weighted average. The weighted average is a measurement that you can use to see if you are overall the cryptocurrency asset class at that time is in a very positive, a very strong momentum of when you put on your positions, you will get profit. So anything less than 0.5 on a weighted average basis, you're not going to do well. But if you do it at maybe 0.75, but for sure at 1.0% on the weighted average or 1.0, you will have positive positions. But there's another set of criteria you got to look for. But just overall in the crypto space, from the timing of it for trading, that's when you go in and start trading. Once that weighted average hits one. Make sense?
So the weighted average of the last 3 hours, is that what you're saying?
Yeah, I would say 3 hours.
And versus the volume?
Yeah, against the volume. That's how it's weighted.
Okay, I see.
Because it seems that all of the pairs that I see, and again, this is on Binance, there seems to be a major correlation among majority of the pairs. Because when you look at cryptocurrency, CoinMarketCap, and you do an overall view of this, is what got me interested in this theory, is when you look at, I would say this is a top 100, majority of them are negative, right? Like these moves on a 24-hour basis.
Uh-huh.
But when you look at, let me just do a refresh here. And I only look at the volume here, or sorry, the top, let's say 10. And you look at these overall 24-hour move, you'll see that they're all negative, right? So when you look at all the other ones, they're all negative. And there's the odd one that's not directly correlated to it, but usually it is. And from there, there's going to be another set of pairs on Binance that you've probably never heard of. They're all correlated. And these same pairs, let me see here. See, they purposely don't put the hourly moves on here, but if they did, you would see what exactly I'm showing. So these are all the, what's that?
I said we can calculate that by using the
yeah. That's what I do.
Yeah,
but that's why they measure it only in 24-hour. But if you measure it on a 3-hour basis, you'll get a totally different set. And there seems to be some correlation between majority of the pairs listed on Binance and these other ones. And there's a correlation of those up moves and down moves.
Mm-hmm.
You see what I'm saying? And in here, you will find pairs that do move, like Neo, or actually, let me pull up my report here.
So you just divide the volume by the average?
Yeah.
That's
right.
Wow.
So here I have this spreadsheet here. I forgot to show this.
Okay.
This spreadsheet does everything. So here, we've got our pair, again, only on Binance. This is measured on daily, but I could generate one for hourly, minute, or whatever I want. But you don't want to get too greedy by requesting 300 pairs every hour. So I can only really do it daily. But this just gives you an idea of how they're moving overall. And here I can measure if there's a buying signal on a daily basis. And here I've got all kinds of things. But here, if you were to analyze this like I have over a long period of time, you will see which ones are consistent, which ones aren't. And it's usually driven by volume. A certain criteria, I don't know whatever you measure it at, but if the volume hits and you put on certain pairs, the higher the volume, the chances, the less volatile it'll be. Which means that you won't, when you put on a position, even in an up market, chances are if the volume's high enough, it will stay positive and you will make money. But you'll be able to calculate that volume at some point roughly when you go through this stuff on your own. And obviously I measure everything by momentum as well as standard deviation. And then I'm able to generate harmonic patterns, which can kind of work. And then here we've got the momentum, R value I don't use, the P value I don't really use. But the slope helps. That's the same as momentum or regression. And then, of course, we have the different trends from a different library I use with different momentum. And what you're looking for is just general consistency. So I give all those raw numbers on the fly.
So momentum is slope?
Yeah, it's the same. If you're familiar with TA-lib, I don't know if you are.
Not.
I know you're a coder here. Hang on, let me just bring it up here.
A total noob to cryptocurrency.
Oh no, this can be used on any asset class.
Yeah.
So let me see here. If I do GitHub. Okay, I'll bring up TA-lib, which is written in C++. Let's see here. So TA-lib is a technical analysis library. You just provide the data. Let me just go to the original. I'm just going to find the original library. Get rid of that. Okay, so here's the TA-lib. This is the original library. It's written in C++, but they also have wrappers for Python, which I use. Here, let me just see if I can give you, so the function list, these are all the technical indicators that you could use. So in my case, if you were to use MOM, which is momentum, if you were also to use regression, or this one here, rate of change percentage, or rate of change, any of these three. Or the other one is momentum and regression. Should be in here somewhere. But all of these three indicators give you back the same data. So it can be any of these, but they're the same thing. So momentum trend is kind of the same. But I just like rate of change. Rate of change is a percentage move over whatever your time frame is, 5 minute, 1 minute, hourly. And it works well. And you measure that over 3 hours, any of these big pairs, and you'll be able to weight the volume of that pair or that coin against the movement using, let's say, rate of change, and then you get your weighted average. You understand?
So the weighted average is like the weighted average of the momentum. Is that right?
No, it's the weight that I'm using is volume.
The weight is volume, but the thing that you're averaging is the momentum.
Yeah, the rate of change.
Okay, the rate of change
and momentum to me are the same, and according to TA-lib, they're the same.
Okay, so the rate of change or momentum, and that is the thing you're looking at, and then but you want to average that
right
by the volume.
Yeah,
which makes sense actually.
Yeah.
Okay. And so then you want that to be you said up, I guess, basically
Yes.
consistently
Yes.
up.
Yes. Because over a 24-hour period, this weighted average will hit 1 at some point within a 24-hour period.
Right.
So what I'm saying is, depending upon the fear and greed of your strategy, what I was saying earlier is if you have a strategy and you measure your daily target, your percent daily target for the entire portfolio or all your positions over a 24-hour period, usually professionals will try to set it at 1%. But here, I could set it as high as maybe 3% using this methodology. So I wait for my weighted average to hit 1. Once it hits 1, then I go into a trading mode, right? So as soon as my first position here, I'll show you an example here. This is a good example right here. This was for the 29th at this time at 1:06 in the morning, right here. My rate of change, that very first position was at 4.21%, right? Here's my profit. And hey, at 1 o'clock after 12 a.m., 1 in the morning, I put on a position because the weighted average was over 1. I put on the very first position. I met my goal. I met my target. I can close down now, close down the entire strategy, wait it out for the next period, 24 hours later, for the next midnight period, and wait it out for that one weighted average 1 to come back again within that 24-hour period at midnight. You see what I'm saying?
Yeah, I think so. So when you say close it out and everything, you mean and start your strategy, you mean you purchase the coin and then you wait a period of time, like 3 hours or something, and then
I shut down the strategy.
Yeah,
because I met my daily target.
Okay, so you shut down for the day, essentially.
Right. I shut down for the entire 24 hours.
Got it.
Because it's 24/7, right? That's the current cryptocurrency market's 24/7.
Right.
So as soon as I hit this 1% daily target, for instance, or 2%, I've met it at 1 in the morning here, 1:06.
Right.
I could shut down the entire strategy, start it up at 12 next day, 12 midnight, and wait it out for when my next time period of when this weighted average hits 1 again. Then I go back into trading, and hopefully I'll have another position that I'll achieve the goal that I want, my target.
And when you trade, you're basically, if it's going up, you're going to buy the coin and then sell the coin after a few hours. Is that the idea?
Yeah, but it moves so fast depending upon the coin. As I showed earlier, I could have a position on. I'll show you another example here. This is today. This is the actual raw log that I generate right here. As an example.
That's the actual tradings?
Yeah, this is a trading log, yeah.
Wow,
PD1, which is 1 minute. If it's PD2, that's 2 minutes. That's once it takes on a position, a 1 minute bar passes after the position has been entered. So there's 1 minute, 2 minute. But you'll notice that most of the positions here do not go beyond 3 minutes.
I see.
Because it's moving so fast.
I see.
You see what I'm saying?
Okay. So you wait for like 3 hours. Are you getting the average over 3 hours? And then you say, okay, it's a good momentum right now. So I'm going to do some trading over a few minutes, and then you're done.
Right.
Once you hit your goal.
Right.
Okay. That makes sense.
Because if you overtrade, like in this spreadsheet here, if I didn't shut down, you can see all the losses I'm taking. So it opened up at 1:06, ended at 7:07. Okay. But you can see all of these negative positions that I've taken on. That entire risk for an extra 6 hours to only get an additional 1%. Right here. This is the net of all these positions. But you can see the amount of negative positions I've taken on.
It's interesting. There's so many negatives to very few positives, but the positives spike up pretty high.
That's right. So that's what I'm saying. You don't want to overtrade. From this point, from column or row 1, all the way down here is really over trading, because guess what? Here, I met my target of, let's say, 1-2%. So why do I need to take the risk on for the extra 6 hours to only get 1, let's say, percent? Most cases, if I do that, I will not only lose here that percent that I get, but if I overtrade it, I could probably for the day be negative because I overtraded.
Yeah.
See what I'm saying?
Maybe there's some automated trading going on that's sort of controlling that trend or something.
I don't know that, but it is Binance. But at the end of the day, it doesn't matter because
you're making your money, sure.
This right here, this weighted average is the key, because I know within a 24-hour period it will hit 1.
Yeah, definitely.
But the thing is, how long will this last? I don't know.
And so this doesn't happen on like GDAX, is what you're saying?
No, only Binance.
Okay, very interesting.
Because I've tried GDAX, I've tried Coin. What's the other big one? Coinbase. They're not big enough. Like, they don't have the breadth and the volume that Binance has.
Oh, okay. It's the volume then.
Yeah, I mean, look, if you look at CoinMarketCap right here, right here. If I go to CoinMarketCap and I measure the volume by exchange, let's say adjusted volume, right? Here you got Binance at 33 million. Or sorry, even at 24-hour period, it's 947,000. The next best one's at 624, and let's say you want to go all the way down. For the U.S., this is the biggest one out of the U.S. Bitfinex. It's only 1/3 of the volume of Binance.
Wow.
And then when you look at let's say CoinMarketCap or Coinbase Pro, it's 1/10 of the volume of Binance. You can't trade. You will not be able to be successful in that kind of exchange.
Okay. So basically, you don't get that smooth average for like a period of time if you go to the smaller exchanges, is what you're saying.
Yeah, I don't see it.
Yeah, okay.
Now, for the amount of time, the amount of pinging I put out there against Binance servers, because of Binance is so generous on their API, I'm able to do it. Now, remember, I've got over 315 pairs to choose from with Binance. With, let's say, CoinMarketCap, it's like 5, maybe 10 or 20, because it's against the fiat currency as well. So I might have a total of 20. So I don't have the selection that Binance gives me. Same with Bitfinex as well. Plus, not only that, but when I do the amount of pinging I do to Binance, it enables me to do that. And I'm putting a lot of requests out there. Whereas if I did it with Coinbase Pro or Bitfinex, it'll cut me off a lot quicker. It's just not a realistic trade. Like right now, here's my strat. Oh, it was working, but look at the amount of requests it's putting out. This is just over probably a minute, not even.
Wow.
It's just a lot of requests being sent out there.
Okay. So this is so are you using CCXT for the library?
Yeah, I am.
Okay.
I'm only doing everything in Python.
So how do you know? Well, I guess like they're cutting you off on the what is it called? Something Coin Pro.
Yeah, Coinbase Pro, GDAX.
Pro. Yeah,
and it will cut you off sooner than you can do anything with it.
Interesting.
But Binance doesn't.
Okay. So you would just have to pay money to them to get them to open their API. Is that right?
Maybe. I can't say, but I would think it's like Interactive Brokers sets a standard in stock exchanges. So where Binance in the world of crypto sets a standard, you would expect the competition to be able to keep up with what standards Binance set.
Right.
But I do think that's why one of the big reasons why the volume is so high on Binance. Now, I must also tell you, OKX, Huobi, I question them in terms of reliability and trustworthiness. Even though they have higher volumes, I would be very careful to trade on these other exchanges. The only one I want to say that I really trust is Binance.
So when you say trust, they're actually giving you bogus data?
Well, I can't say if it's bogus data, but I do know that some of these other exchanges get hacked. They also have been hacked. There has been insiders trading against you. Yeah, and there's a lot of fakery stuff going on the volume. Binance, from what I'm seeing, has not been a problem so far.
Okay. So if they're hacking you, they could just artificially reduce the price after you buy or something like that.
Well, not only that, but they could take out of your wallet, out of your account.
Oh, wow. Okay.
I mean, there was one in Japan that was hacked a couple of weeks ago. Quite a bit of money was lost.
How do you tell which ones are trustable?
I would think online, if you go look at looking up reviews, like if I looked up Huobi, let's see, Huobi review. I think they're out of Japan.
GDEX maybe.
Well, the U.S. ones are reliable. The problem is that they don't have enough volume.
I see. Okay.
Okay. The U.S. exchanges are kind of reliable because they're trying to get regulated to add institutional capital into their exchanges. The Coinbase is getting there, but just on the retail trader from a cryptocurrency retail trader end, they have no volume. They need the institutional to get the same volume as Binance is at. You know what I mean?
You're saying that the fees are very low for transactions.
Yes, the US based ones I do, yeah.
Okay.
Yeah.
And for Binance also, or?
Yeah. No, Binance is okay.
It's okay. All right.
Yeah. Yeah.
Okay. Super fantastic information, Brian.
Yeah, but if you look at Huobi exchange reviews, I'm sure you could just read them. Lots of people have negative things to say, I'm sure. Automatic, instant, I could go on, but the two ones that I have seen to be questionable are Huobi and OKX.
Okay.
But Binance seems okay. The only one that's okay as well. And that's the only exchange I'm willing to trade on because all the other ones I've kind of experimented with, specifically the US ones, Bitfinex, Coinbase Pro, and GDEX. And they never have what I'm looking for compared to Binance. So
those guys, but that's just because of the volume, right?
Yeah, and trustworthiness as well.
Oh, even for GDAX and Coinbase Pro and those guys.
I don't question their reliability. I think they're reliable. As I said, they just don't have the retail volume. But once they get some kind of approval from the SEC for institutional, they may be able to get up to the level of Binance. But there's also another exchange, which is a derivative market called BitMEX. Let me just see. See here, this is why CoinMarketCap has adjusted volume versus reported volume,
right? To
ensure that they're adjusting the volume to make these reports more reliable. So, but still, Binance is still on top, right?
Right.
So, I've been with Binance for not long, maybe 4 or 5 months, and I'm pretty happy with them. The level of security has been pretty good. I'll even say that I think that Binance is more secure than any of the US, even Forex, stockbrokers. Binance is much more secure, much more safer to trade on. They have like 4 different levels of security there. It's pretty impressive.
Wow.
Because I'll give you an example. With Binance, let's say you get an API token, it'll only show up on your account once. And it's never stored on your account. So that's what hackers are looking for, because Binance does not allow you to store the API tokens on your account. Once you move on to the next step, that token becomes useless, and only you have the token. It's that secure.
So I guess you have to watch these guys too. Like, well, for instance, you would have to watch Binance to make sure that they don't, like, if they do get hacked or something, if all of a sudden they become untrustworthy, you want to detect that as early as possible.
Sure, but then with CCXT, you can have automatic withdrawals out of the account.
Right.
So you can program that every couple of hours if you want to get paranoid.
Okay.
And the thing is that I've tested that, and you will get your money back, or sorry, your Bitcoin or whatever crypto you choose.
Right.
You will get it back because it's put on the blockchain. It's just a matter of when will Binance, the exchange, put your funds into the blockchain. Once it's put in the blockchain, now it's safe because you will eventually get your funds transferred over into your wallet.
Does it? How long does it? Well, different coins take different amounts of time for purchases. I've heard. Is that okay?
Within 2 hours.
2 hours. Wow. Okay.
From what I'm testing, I should say, on the Bitcoin wallet to fund it can be pretty fast, within an hour.
Okay.
But from Binance, I've seen it an hour or 2 hours for Binance to transfer that coming out of your account onto the blockchain.
But you can still make the purchases quickly. It's just the transfers themselves take long.
That's right. Yeah.
Okay. I see.
As long as you have enough Bitcoin or whatever crypto in your account to cover the trades.
Right.
But you can automate the whole thing with CCXT.
Yeah, definitely.
I just haven't gotten to that level yet. I mean, all I'm working on is just the trading itself, the core trading logic, the rules.
Sure. Very cool.
But it's pretty powerful from what I'm seeing, and from what I don't know if you've experimented in Forex to get the same kind of swings and the same kind of return with Forex at a retail level. Mm-hmm. You have to put on a lot of leverage to get the same kind of swings that you're seeing. So, as I said here, if I'm getting a rate of change, and this is again in a minute, if it's positive for me or profitable, the rate of change can be within a minute. It can be 2-3%. Mm-hmm. You don't get those kind of moves unless it's some extreme news event on a Forex pair.
Right.
It's very rare that a pair will move beyond 1%, but here you can get, I've seen moves within an hour can be up as high as 20%. I mean, it's rare, but for instance, Ripple went up 30 or 40% within 24 hours last week.
Wow.
You know what I mean? I really like crypto. It's just a matter of finding the exchange that you can trust. And the one I seem to trust is Binance.
Okay.
You know, there's a lot of advantages I find with it once you wrap your head around it. The only thing is the entry point, the access to get your Bitcoin on a wallet. And that's what the government's trying to control. Because they know that they lose that as a tax opportunity, right?
Right.
But with Binance, they set it up in a different kind of way.
So, yeah, that's another problem, right? I have like a bank account or a credit card, and I want to turn those into crypto, and then I want to turn them back into dollars.
Yeah,
so that's when they start hitting you with fees. Is that right?
Not just that, but when let's say you go with Coinbase, right?
Yeah,
which is usually the standard for out of the U.S. So if you go with Coinbase, you're now your application, your ID, then gets sent back to the IRS automatically. So they know you're opening a cryptocurrency account and you're trading cryptocurrency.
Right.
So they're going to put a lot of third degree on you. They started that last year, and they've just started that here in Canada this year. Oh. So you got to be very careful on that. I mean, you want to be obviously above board, but a lot of people are using these methodologies to avoid tax. And I don't know if you know, but Coinbase Pro may now be accepted on Amazon. So if you trade on an exchange that's anonymous, like Binance enables you, you could trade, profit, build up your wallet in whatever crypto, and then you can draw off that wallet into your Coinbase. So when you make a purchase on Amazon, you can make a purchase on your Amazon account using Coinbase, but you're just drawn off of your wallet, using the wallet as a form of a bank. See what I'm saying?
Yeah. Yeah, I think New York has set up a lot of those too. Different cities in the world have that.
Sure. But here's the problem: is it's still maybe legit, but at some point they'll crack down on these because this is lost money and lost tax revenue for, let's say, the IRS.
Right. Yeah.
You know,
it's like say I make a mint. Say I make like $1 million or something on crypto trading. You know, like I put in 10,000 and I'm pulling out like $1 million or something.
Sure.
Just like being theoretically. Then how do I get the $1 million out in a legit way?
Well, what you do
in a way to minimize the taxes and fees and stuff.
What you could do is you could transfer your Bitcoin, let's say Bitcoin, into a wallet that you have stored, cold storage, let's say, or hardware on can't remember the ledger it's called, and you transfer all of that Bitcoin onto that ledger USB device, right? But you got to secure that. That's all your Bitcoin stored on that. Right. But with the QR codes that are generated through that, and when you purchase through Coinbase, what you can do is you can transfer little bits of Bitcoin from that ledger wallet, let's say, and whatever you need, transfer it to Coinbase, and you make your purchase. Nobody would know.
Okay.
Because the thing is that, as far as I know, when it comes to law, let's say you do this with Binance. Right. And as you said, you may go from $10,000 to $1 million on your Binance account. Binance don't know who you are.
Right.
I think they're clamping down on it as well. But let's say even if you did it at 50,000 or 100,000, right? They may not know who you are, but once you transfer out that Bitcoin to another digital wallet, there's no tax there. Once you purchase something off of the Bitcoin in the US and you make a purchase using Bitcoin in the US, that is what they call a taxable event.
Sure.
And that becomes part of your income. But when you earn whatever on Binance, $100,000, let's just say, it's not a taxable event. It's once you start drawing out of it into a fiat currency, that's when it becomes a taxable event.
Oh, okay. So it's kind of like an IRA. You tax-free savings until you withdraw it.
Right.
Okay. That's very interesting. So, and that's totally legal. That's the way that.
First, I know, but I will tell you, as more people catch on that, they will clamp down on it.
Yeah.
They'll just redefine what they define as a taxable event.
Right.
You know, if they come back to Binance, and I don't know how they'd be able to do it from a regulatory standpoint because they're out of either China, Taiwan, Malta, whatever it is.
Wow.
How does the U.S. government and the IRS enforce Americans that are on Binance? You know, to pay out tax on their proceeds from their Bitcoin trading. The thing is, Bitcoin has been set up on purpose where it's 100% crypto exchange and there's no fiat involved. And because of that, it's anonymous, literally. Right. Or can be anonymous. But they are setting up new exchanges locally in different continents where they will have fiat exchanges. They're just opened one a week ago in Singapore. So it's a separate exchange, but it's geared towards Singapore. So I don't know the regulatory yet on how Singapore will handle it, but there will be one for North America. So I don't know how the IRS, or my case, my tax authority will handle it.
Well,
and if finance will comply.
Right.
You know what I mean?
Yeah. Well, I mean, the problem exists for currencies, right? Like
You mean fiat?
if I buy like some Russian rubles or
Yeah,
something,
yeah.
thinking that's going to go up, and then sell it, right? That's a well-known indication, right, of buying currency. So
Well, yeah, but you also got to remember it's the access point. So when you
yeah.
open up an account, a forex account,
Mm-hmm.
let's say a Wanda, Dukas Copy, whoever, FXCM, whoever, they're going to know who you are because you have to provide ID.
Right.
Once you provide that ID, then that tax authority will know who you are because you have to provide the ID.
Right. Well, actually I just signed up for Coinbase Pro, and yeah, they got my driver's license and everything. So they know I'm there, but like when I actually, take my credit card and, put some money in, will they see all those events as well? Do you know?
No, but they are tied in with the IRS.
Okay.
So if the IRS suspects that you're trading crypto, which they already know now because you're with Coinbase,
yeah,
they'll be watching you, and they can get direct access to Coinbase and your account. You won't know it, but they will.
Okay.
So if you do anything monkey around on your IRS return or your tax return, they'll know. Whereas if you're on Binance, you can sign up for now. I don't know when. It may change, but you can get on there anonymously.
Right. But I suppose I guess what I'm saying is how do I behave legitimately, at least on Coinbase Pro?
Well, then you have to declare what you make. That's what you got to do.
So just whatever. Okay. And then Binance will be the other.
Yeah, but it's anonymous. When you sign up, it's anonymous, or it can be.
Okay.
Right? All they care about is you transferring Bitcoin into some virtual account. They won't know who you are. They'll just know your Bitcoin wallet.
But so the IRS could actually watch my transactions, is what you're saying.
Not on Binance. There's no tie back to you.
Not on Binance, but on
KYC, know your customer.
Mm-hmm.
They don't have KYC on Binance.
But Coinbase Pro, they won't by default, but they could audit my transactions, all the transactions.
Yeah, no, they're already just started. If you signed up lately, you've just now told IRS I'm trading cryptocurrency on Coinbase.
Right.
Because they have access to all those files. What's that?
They can see that I registered, but can they see what coins I bought and sold?
Yes, they will get access to your activity.
Oh, okay.
There was a big lawsuit in Canada for 3 years with PayPal, and nobody knew that this lawsuit was happening. But what was happening was we have this our tax authority is CRA, Canadian Revenue Agency. So the CRA went to court with PayPal, and they got a court order that every single Canadian that is registered with PayPal, by law, with a court order, the CRA now has access to every single person's PayPal account. And they have access to pull those records any which way they want at any time if they suspect any monkeying going around. And if they do, they'll audit you. And it's the same with the IRS and Coinbase. The only difference was there was no lawsuit involved. It was just automatic.
Okay.
You see what I'm saying?
Yeah. Okay.
So
it's basically, audit flags. Like, okay. So, any kind of profit. Yeah. So like I'm doing independent business, kind of like you, internet money.
Mm-hmm.
And so the IRS sort of doesn't have they have no way of knowing whether I'm making what I'm saying. They can't really validate it.
No, if they suspect you, they just give a call to Coinbase, say we want access to the records.
Right.
They have them right then and there.
So whatever's in the record, I'd better pretty much just to make sure I declare everything, and it should be fine.
Absolutely.
Okay. That makes sense. Okay.
Yeah, but when you're with Binance, you're signing up anonymously. Hint.
Yeah. Got it. Yeah. Wink, wink, nudge, nudge.
Yeah,
Exactly.
exactly.
Right.
But that's the key. If you can sign up with an exchange that you trust anonymously, I'm not saying do it or don't do it. I'll leave it to
Right.
you.
Yeah.
But you could, if you do well, you could have X amount of dollars, however big it is, stored in some wallet somewhere that's secured, and you can slowly draw off it. And no one would know how much you got because it's not registered anywhere.
Right.
But if you go with Coinbase or in the US exchanges, yes, they are.
Right.
The IRS ain't going to just sit around and just let people sign up to cryptocurrency exchanges without enforcing some kind of know your customer rule.
I mean, it's like the US is, viewing everything. And in China, I have privacy. That's different.
That's right.
Different. It's different than expected.
Well, it's the same thing with Forex brokers. The US think that, I don't want to say they're the freest country in the world. They're not, because they have special interest where they've got now the pattern day trading rule, 25,000 before you can automate a trade. Right. You have all these special interests to keep the retail trader down. So now you have these Forex brokers that have been kicked out of the US. FXCM is one. A few years ago, Dukas Copy was kicked out. The last automated trading Forex broker that's out there for retail traders from an automation standpoint, there's only one left, is Awanda. That's it, and Interactive Brokers. But if you go to Europe, even Canada, there's a variety of Forex brokers that we can choose from, but they will not take American customers because of the regulation. They just don't want to deal with it.
Right.
And the other thing is the currency selection in European brokers is much larger than what you get out of the US. So that's a disadvantage for the, Americans, because they're just kind of indirectly kind of screwed over by these special interests out of Chicago or New York, because like you got CME, they want to keep as much as they can and hang on to from an institutional point of view, and not allow little retail traders to grow their accounts through automation. So they're trying to keep a handle with special interest and keep that locked down. So retail traders in the States cannot grow.
So they actually monitor your traffic to see if it looks automated?
No, I'm saying is that you got special interest from the CME, CBOT, like those big exchanges have spent millions of dollars to lobby the US government. So when new laws come out, it's not in the favor of retail traders, individuals. So a good example of that is the pattern day, the pattern day trading rule?
What?
Okay, PDD. Let's say you wanted to trade stock, okay? You would need in an account when you start to do automated trading, I think it's $20,000 or $25,000 US in an account in order to start your automated trade. So let's say you sign up with Interactive Brokers and you put in 10,000. Okay, you want to trade stock using automation. I think they put a limit of maybe 3 trades a week because of the pattern day trading rule. Once you get an account with over $25,000, then they'll lift that limit, but only is on stocks.
I see.
But they don't have that if I signed up with Interactive Brokers. There's no pattern. I don't have a paid pattern day trading rule as a Canadian, but the Americans do.
Okay.
See what I'm saying? Is that there's so many regulation things out there that go against the small retail trader.
Yeah, especially in the US.
Yeah. It's unfortunate, but it's that special interest groups that hold that back.
Right.
Yeah.
Or you can get 25 grand. Or if you can get 25 grand, then you can get past it, I suppose.
I don't know about you, but I don't know a lot of people that can just pull 25 grand out of their ass, Not a lot of people can do it. I mean, I know people that will save like $5 grand over 6 months in a job. go into trading, lose it, and go back at it. But like larger sums of cash, I don't think it's as easy to save up.
But you got to kind of learn how to do it too. You can't just start doing it
but
and hope to do well. You have to it's a skill.
Yeah, I'm not denying that, but that's why I like crypto, because there's no regulation.
Yeah, I see that. That's cool.
And the swings are so big, you don't have to use leverage.
Yeah.
You know what I mean?
Yeah.
And the fees on Binance are so tiny, you won't even notice it's like 0.1. That's the fee. You know what I mean? And it's just so many advantages with crypto. As I dug more into it, I'm like, I don't have a need to do Forex trading, because in order to get a 2, 3, 4% move, I have to add on that leverage and the risk to get that move. I don't have to worry about that with crypto. It's 1-to-1, no leverage needed, and I could get a nice 3, 4%.
Okay.
That's the beauty of it. I mean,
cool.
Among other things, especially with Binance. So, unfortunately, I just don't think the place for Americans. It's just the way it's a rigging game that are screwing over the small retail trader in the U.S. and it's a shame.
Yeah.
We're going to try to protect you with your own money from automation, but yet you're prohibiting them from even trying.
Right. Yeah, that's kind of hypocritical.
Yeah. I mean, in your land, you'd want to say, hey, it's my money. I want to be able to trade if I want to trade it. But special interest says no. So they bring out these laws. I mean, it's the most dumb-ass law I've ever seen. But you don't have these problems with crypto. It's a nice asset class.
Well, it seems like you would have it if you go to Coinbase Pro.
Yeah,
so you have some problems. Well, you only have to pay taxes on it. I guess that's.
Yeah, no, but I think the trade as an exchange, no, I don't see Coinbase Pro there yet as an exchange because the volumes is tiny. And the currency selection sucks as well. But it's the right way to easily transfer cash into crypto. It's the easiest thing to do. When you're starting out, that's fine. But as I said, you need to understand that you've now just signed up with the IRS and declared to the IRS you're now trading crypto.
Right.
So whatever you make now, you declare.
Got it.
Because they'll know otherwise.
Well, yeah. I think, okay. But you could always go through Binance separately as well.
Right. But you got to find a way to get cash into Bitcoin. That's the hard part.
I see.
Because here we have the ATMs and you scan the wallet, put your cash in, it costs you 6%. That's pretty hefty.
Yeah.
10 grand, $600 in the fee. That's pretty hefty.
Okay.
So
that's like converting it. Well, if I do it through the exchange, then the IRS will be able to flag that it's me doing it. And so any monies, any Bitcoins that I put in or take out, they can see.
Yeah, they will.
So if I pull $1 million out, they'll know it.
Yeah, absolutely.
And I'll have to pay taxes on it.
Well,
but so like I could have it in Binance, but then it's like, how do I get Bitcoins without going through? Yeah, how do I get Bitcoins without going through GDAX, for instance?
What I'm saying though is that if you have a wallet, let's say you have 100 grand equivalent Bitcoin in a wallet somewhere,
right?
You can use that, as I said, to use it as a form of your own bank account and just draw off as you need.
Right.
So
if I have a cold wallet, I can do that.
Yeah, but you still may get flagged down the line as more people do it. I can guarantee you that the IRS, all the tax authorities will figure a way to clamp down on that.
Yeah, so I still have to somehow purchase Bitcoin from someone somewhere. So there has to be a transaction.
Yeah, it has to be done anonymously.
Yeah. well, so if it's done anonymously, they won't know about my
That's
wallet,
right.
my private wallet.
Yeah,
And
that's right.
the question is, how do I do that?
Well, you can do it outside of the U.S.,
Right.
but then it comes back to which one do you trust?
Right.
Right. For me, I trust somewhat, at least from what I'm reading, the last place to go that's trustworthy is Binance.
Yeah. And so, yeah, probably the Chinese like that. They're like
Well, the Chinese government's been clamping down on Binance. So the guy that started it, he's moved the head office location to Malta because Malta will take them with open arms. Right?
Yeah.
So they moved the operation to Malta, and there's other countries like Switzerland that will take them too.
Right.
So it's to the U.S.'s loss.
Exactly.
I think so, or the West overall. But countries like Malta, there's a lot of countries that are taking these exchanges head off, like BitMEX is head office is out of the Seychelles.
Mm-hmm.
So
right. So there's still ways to get Bitcoin without having to go through an audited source.
I think so, yeah.
But like, would you? Well, okay. I mean, from within the U.S., or you leave the U.S. soil to do it? Is that?
No, I wouldn't be involved in any form of transacting within the. I wouldn't do any transacting with cryptocurrency in the West. Period. Because I'm British born Canadian,
mm-hmm.
and I wouldn't be in any of these kind of countries where they have their fingers in my pocket when it comes to crypto. There's lots of countries where you can go and be outside of these jurisdictions, like Malta right now, Switzerland, and somewhat as ironic as you said, Hong Kong, China. They don't care. Taiwan.
Right.
But these other countries, like where we live, Canada, US, they're going to try to regulate it, and they already have regulated pretty tightly.
So, I mean, if you go to like Taiwan or Vietnam or something, and you can safely obtain Bitcoins.
Yeah, but as long as your primary country is not the U.S.
Oh.
Yeah, you have to move out of the U.S. entirely. Because if you're going to play this game, you have to be outside of the West. As long as you're not filing a tax return in your home country, like me in Canada or UK or US,
right?
As long as I don't have to file a tax return, yeah, I can do it.
Oh.
But you have to be willing to relocate to do this successfully, I think.
Okay.
But my answer to myself is, yeah, I am.
So I'm just saying, like, if you get a cold wallet in another country, bring it back with you on the plane and store it in your basement, and then you're doing your trading off of that. So that cold wallet will, maybe double in size, and then you take it back out of the US next year and get some currency with it.
Yeah, but I think they're going to be treating these things like drugs.
I see. Okay.
That
could be considered contraband or something like that.
Yeah, something like that. Yeah.
Okay.
I don't think you'd be able to transact in the US with crypto. The Western governments are very paranoid about this because they're going to lose tax over it.
But we can do the transaction. We just have to pay the tax, is what you're saying.
Right. If you want, if you're okay with that, go for it. Here politically, it's a nightmare in Canada. I'm just to a point where I don't want to pay tax anymore.
Right.
For where everything's at in Canada.
Right.
So I'm ready to relocate outside of pretty well the West. A lot of the growth is in Asia.
Yeah.
And what you do in Asia, none of those governments give a crap because you're a foreigner.
Yeah.
You're not living there permanently.
Yeah. Thailand looks better all the
Thailand,
time.
yeah, they don't care.
Yeah.
But if you end up trying to file a tax return, let's say in the US, Canada, or UK, in my case, then they will own you.
Okay.
Because 10 years ago, if I was a foreigner or living outside of Canada and I filed a tax return as a Canadian, I only am responsible for the tax if I was working in Canada. And if I'm outside of Canada and I'm filing the tax to say my income is $1 million, but I'm living full time in, let's say, Thailand, Canadian government doesn't care. They're not going to want to see tax on $1 million. That was 10 years ago. Now it's like the States. You whatever your worldwide income as an American, the IRS wants a piece of it, no matter where you live. That's why people are giving up their US passports in droves because of that. And Canada's become the same way. So why would I file an income tax return in Canada if wherever I go, no matter what I do, I'm supposed to be responsible to pay back whatever tax or income tax on the income wherever I'm at? It doesn't make sense to me. You know what I mean?
Yeah. Yeah. I remember hearing some time ago, one of the Facebook founders was making billions of dollars and he defected from the US so he didn't have to pay taxes.
Yeah.
I guess I can understand that.
Apple does it. They have their operations the company that has operations is based out of Ireland. They pay almost nothing in tax.
They have some brilliant money funneling.
Sure, but Apple's doing it.
Yeah, they're doing it brilliantly, and I guess it's legal.
Well, now I don't know if you're a fan of Trump, but that's why he's wanting all that cash to come back to the U.S. So he's dropped the corporate tax rate, and Apple complied and said, "Okay, we'll bring back. I think it's like $1 trillion or $2 trillion back to the U.S."
Yeah, I heard something like that. Yeah.
Yeah. So, the biggest corporations are doing this too. Okay. So they don't. It doesn't make sense. Like the U.S. is one of the highest corporate tax was, but now they're not the lowest, but they're down there. They're more competitive. Before Trump, it was probably the highest out of the G20. And once UK breaks off from Europe with the Brexit, they promise that they'll have the lowest corporate tax out of all the G20. So that appeals to me, right?
Right. So
we'll see, but I don't know what will come out of it next year.
Okay. Wow, that's a great lesson. Thank you.
Oh, no problem, man. But wherever I can help you, just let me know.
Yeah. Well, I appreciate it. You're a great resource.
Oh, thanks. But wherever I can help you out, man. You got my email, right?
Yes, I do.
Yeah. So
we were talking earlier today.
Yeah. I'm always around.
Okay.
But how long? It's 9 o'clock. Yeah, 2 hours. It's not too bad. But I just got to get back to what I was doing here. But
sure.
But I'm gonna check out my see if the market's coming back at all.
What about that one program you have that's like for $500? What is that about?
Oh, that one. It's let me see here. Let me pull up that page. Okay, so in my store, here, blog. Let me just see here. Okay, so if you go to my store right here, I've got two levels of this thing I call Quant Elite. So in there, so there's the trial, this one, the 2 months trial, and then there's a full membership. But you can see the price difference. That's charged on an annual basis. This one's like a trial for 2 months.
I see.
It gives you there's 3 courses. The first one is on the Python infrastructure algo trading. Then I have another one on how to use the Interactive Brokers API. And then I have another course for people that are not strong in programming to use something like Dukas Copy out of Switzerland. They have a pretty cool tool, and it's visual. So you can build different blocks to create your strategy. And it gets you into the mindset to be able to build a strategy against a real broker and understand all the different pieces that go into the strategy. And you can do that all visually. So I have 3 courses that offer that for this price. And I keep it to 2 months just so that it's enough time for people to kind of lump whatever which way they want to go. Most of them want to do the Python infrastructure one because they can build a basic trading system like here with all these scripts that I'm running. I can download everything from the exchange. I can put the trade on through Python. I have a small database here that tracks everything. My watch list. And then if there is a position, let's see if there is any positions. No positions yet, but there's a position table to track everything. So I have a course that will guide you through this whole process, among other things, with charting, and it's pretty basic, but it gives you all the basics that you need. And because it's in Python, it's probably one of the fastest programming languages out there on the planet.
Okay. Well, it's pretty easy to.
Yeah, I mean, I've looked at pretty well all programming languages out there, like C++, Java. I've worked with Java for forever, C++ and C. And I'll tell you, when I look at those languages, I'm like pulling my hair out, But with Python, I can do a lot in like 3 lines.
Yeah.
You know what I mean? I can download. I can then convert that into a data frame. Once I have everything in a data frame, like a spreadsheet, I can then total up the column and do some basic math operations. Yeah. And I could chart on that or whatever I want.
Yeah.
And the thing is,
I used to code with Perl, and that was like, I was really fast with that. It was, I started with C and then I went to Perl. I could code 10 times faster.
Yeah.
But it was like, then you go back to read your Perl a year later and it's hard to read. But Python's a lot better in that respect. Yeah.
Well, Python's a lot, they call it monemic, where it's easy to understand. And the thing is that there's different ways to program with Python where you can trade it like an object-oriented type of system. But I personally think that Python is not really built to be that way. But you can treat Python like a scripting language as no different than Perl.
Right.
You know what I mean? It's got its own interpreter. You run the script. It could be 100 lines. You can do a lot in those 100 lines and be done with it. Like I've got a scheduler in Python.
Yeah.
Let me just see here as an example. Let me just show you here.
So when you talk, I'm sorry, I'm getting a little distracted by the name of that code, test risk. That's the risk is essentially, we're not talking about alpha, are we? When you talk about risk?
No. It's like when you watch Bloomberg or any of the options traders, like today, they'll say today's a risk on day. Risk on means today's a day we can start trading. If it's risk off, they're not going to trade, or they'll trade in a conservative way. So it's risk on, risk off.
I see.
So
that's what you're talking. You're looking for that ratio of 1.0.
Yeah, and it's risk on.
That's a risk on. I see.
Risk on. Yeah. That's where that name comes from.
I see.
Let me just show.
Risk on kind of means low risk, is what we're saying, right?
Well, it's either risk on or risk off. If you're going to trade it, risk on, or risk off. You're not going to trade. It's not worthwhile because you have too many falling knives.
Sure.
Which means if you put on a position, you're probably going to lose money, basically. But back to the code. I mean, this is very, very simple what I'm showing you here. So we can import our packages, schedule time. We set up a function or by definition. Then we could schedule this particular function for every minute, run this function or a function called job. Mm-hmm. And then we could set it and put it into an infinite loop. Simple. Try that with Perl, try that with Bash. I mean, that's how, and I'm doing it in 13 lines.
Right.
I could do it in 10 lines if I took out these 2 comments. That's the beauty of Python. Mm. And you look at it, you go, I know what it's doing.
Actually, I don't know what it's doing. Every minute it wakes up and runs, but that's an infinite loop. So,
yeah.
Okay.
That's how straightforward it is.
Okay.
But the thing is, go ahead.
Every 1 minute it wakes up mm-hmm. and then runs into this infinite loop. Mm-hmm. So then what happens the next minute? I don't quite understand.
Okay. This right here, this line right here.
Yeah.
Line 7, that sets up the scheduler.
Okay.
So it's using this schedule package.
Yeah.
And by calling this as it is, schedule every 1 minute, do this function called job. Okay, that's to set up the scheduler. Okay. Sets up the infinite loop, and then just whatever's put in the scheduler, run it, sleep for a minute or a second, wake up and run the job again.
Got it.
But it does it every minute.
Yeah, now I see what it's doing. Okay.
See what I'm saying?
Yeah.
So I could run this on the command line. Right. So it's sleeping right now. And it'll run, I think it's so if we wait a minute, it'll say I'm working. Pretty simple.
Yeah, I got it.
And when it comes to now teaching kids how to learn Python or any programming, it's Python. They learn, and these are 10-year-old kids. Mm-hmm. It's that easy. And they're predicting that when it comes to data analytics, and you know how people do everything in Excel?
Yeah.
They predict Python's going to take over with the spreadsheets, with the data frames. You can do the same thing and have so much power. And the other thing you got to remember when it comes to machine learning, the machine learning, everything's going to be in Python. Yeah. Because the big library, TensorFlow from Google, TensorFlow 2, majority of it, to interface and really use it to the full advantage is all going to be in Python. So, I mean, the majority of the world, programming-wise, is moving into machine learning, and the standard de facto language when it comes to machine learning usually is going to be on Python.
Right.
You know, and that's what's driving the popularity of Python is that machine learning element. And they're also, from what I'm seeing on the trends, when it comes to web programming with JavaScript, they're saying no. It's going to be one of the libraries or packages from Python will eventually become the choice when it comes to web interfacing, and everything's going to be in one language, something like Python.
Right.
And the way they're designing the language, I mean, how it's slow and whatnot. I mean, the advancements in some of these other packages to be able to embed C and compile C language that Python can interface with in line with Python can speed up the language incredible. And the GPUs they're bringing out now, where you can build a script and put it onto a GPU, you can interface it with Python and speed up your Python just from the GPU level as well.
Yeah.
It's impressive. And they predict within 3 years, Python will become the most popular programming language out there. And I mean, it's already, I think, third. The only thing that's stopping it is because there's so many legacy projects done in either Java or C. You know, go back 20, 30 years. Right. You know what I mean?
Right.
But in terms of the language growth, it's Python. It's number one.
Yeah.
And
Go language seems to be.
What's that?
Go seems to be making a run.
Yeah, but I think even Google was the ones that brought out Go. Mm-hmm. But TensorFlow is another Google product, And they know that in order for TensorFlow to grow, it has to be done in Python because that's what the world's using.
Yeah.
But they will have bindings into Go. But the first language of choice, from what I'm seeing with TensorFlow 2, is in Python.
Yeah. Well, I think probably Go might become like a Unix thing, and Microsoft has their C#, and but those are like going to be OS type languages, but for the common people.
Yeah.
For actually getting stuff done, it would be more like Python.
I think so.
Yeah, makes sense.
I think Python's got an amazing future. And about 3 years ago, I didn't like Python at all. But it's advanced so much and matured so quickly. It's a good language. It's really good. And as I said, when I look at Java or C++, I look at that code and I go, I don't want to even touch it because it's a hornet's nest to maintain. But
yeah,
Python's very easy.
Yeah, I agree with you there.
Huh?
I certainly agree with that.
Yeah. Yeah. And it's, I mean, from a career point of view, you can't go wrong with Python, you know, but I do enjoy working with it.
Yeah.
You know?
Yeah, no, me too. I didn't much care for Python. Well, I thought it was okay, but it was, I didn't like the structure because I was used to Perl, and but then I learned to really love it once I had committed everything to memory.
Yeah,
that's the thing. Is like once you get like it becomes a second language. Like
right.
I was actually doing like a job interview, and the guy was trying to ask me a question. You know, how does this code work, or what should you do to accomplish this problem? And and he was trying to get me to say it in language, and I'm like, I can't tell you in language, since I have to write it in code for you. So I have to write. If I can write it in Python, I'll understand completely what I mean.
Yeah.
Because it's like you learn how to think in that language, and at that point, it's like, and Python is one of the few languages you can do it. It looks the most like pseudocode of any language.
Totally agree.
Yeah,
and it's very compact too.
Yeah.
And what I can do in 200 lines, it would probably take me well over 1,000 in Java, or probably double that in C or C++.
Yeah.
To read in a data frame and do the math, I couldn't even think about trying to do that in C or C++.
Yes.
To read in a CSV file, put it into a data frame, be able to manipulate the columns, total or average or whatever I want. I could do that all in probably 6 lines.
Yeah. I years ago when I did C++, I could do extremely complex things in short amounts of code, but it's because I had created a very extensive object-oriented library to support all of those things. But and then if you go someplace else, you try, like, you can't take that to, like, if you go to a company or something. Yeah. Like I did that in grad school, but it's like I couldn't, you can't take that to a company and say, I'm going to do this, because, nobody wants you to bring your whole private library. And, they all have, and they have their own private library. So everybody has their own, and and it's kind of, it's chaos. Whereas Python is like a standardized way of doing this.
Yeah.
And so, yeah, you can just pick up your whole self and plop down another place with Python, and you can do, like if you have pandas and all that, and the SciPy and all those things, they're all there, and you just pip install, and you're good to go.
There you go. Exactly. And the thing with machine learning now, I think over the next 3 years, more and more people will move on to TensorFlow and something like TensorFlow 2. It'll be the same thing where you have...
They want deep learning. Yeah.
Yeah. Yeah. I mean, that's the future, I think, and it will be in TensorFlow with Python on TPUs and Google Cloud. That's why they open source it, because Google knows they don't want to be just relying on on advertising anymore, and they need to diversify. So they want to be like Amazon and have a cloud solution for revenue like AWS. And the only way they can really build that out is by having something so prolific in industry that will use their own custom, what they call TPUs, tensor processing units on a cloud environment. Yeah. And the way they do it is through TensorFlow.
Yeah.
And that's what they're developing, and they look like they could succeed. And if they do, and more like this, I mean, possibly AWS will become less relevant. I mean, I shouldn't say that, but definitely with TensorFlow and TPUs, that will put Google in the forefront of something, because IBM tried and they failed.
Yeah.
You know?
Well, you've got the Microsoft Azure, you've got Oracle has a significant. I'm actually looking at the Oracle Cloud, and it's significant. It's got a lot of stuff in it, and a particular slant on it. And then you got the Google Cloud, and then of course AWS.
Yeah.
So there's a lot of competition there at this point.
Yeah. I just think that eventually the two ones in the next 3 to 5 years will be Google and AWS.
That certainly could be. I mean, I think you're going to still have, like, Microsoft has its fans because they only want to use Windows stuff.
Yeah.
And Oracle kind of has its fan base as well. Like, they have their PeopleSoft and their CRM products and Oracle products. So they may be more like,
and don't forget there's Salesforce as well.
Yeah, especially, I don't know, does Salesforce have their own cloud now?
They do, yeah. It's all Salesforce related.
Okay, yeah, that makes sense. So yeah, those are kind of maybe more specialized clouds.
Mm-hmm.
So you're probably right about that.
Yeah, but I think if the libraries have seen that have an opportunity to grow in the world of machine learning, deep learning, or AI,
yeah,
I think it's going to be Google and all that.
Yeah, probably. Yeah, because they've got the TPU thing, and Amazon doesn't have that. That's a significant. And piece.
The whole operation now in Google are running off of these TPUs. They got thousands of them.
Yeah, and Google is really good at hardware too. By the way, they're like they have from the very beginning been able to create the cheapest data center, so the lowest cost per CPU cycle of anybody. Yeah. So they are actually already set up for the success in the cloud if they just apply themselves to it.
Well, they have to in order to stay relevant. People are going to no longer, I mean, with new browsers coming out that are with VPNs and and all the privacy. I just tried one called Epic, and it has everything out of box. Push a button, you got your VPN. You can then say where you from. You can run it on YouTube, and you get the language specific to the VPN language you choose, and at the same time, it will eliminate all the ads with the ad blocker out of box.
Nice.
And if more people jump onto a browser like that, and the other thing is that Firefox, Safari, they're getting rid of the Facebook Pixel, which does all this tracking as well. So more and more browsers are, offering all these privacy features. And, I think as people become more aware of it, they'll eventually get off of their Googles and their Facebook and start using the VPNs and these browsers. Because I don't know if you ever used DuckDuckGo. I mean, their search results are almost as good as Google. And who knows where it go. But I think Google knows that their primary source of revenue is going to come to an end, and they won't be able to track people like they do now. And same with Facebook too.
Yeah. Well, they always had so much. They would buy up so much bandwidth. They'd buy up whole fiber optic networks and massive arrays. Millions upon millions of machines and all that. But they always just instead of like, they could have been an ISP a long time ago, but it's like more cost effective for them to just use it for themselves.
You talking about Google?
Yes.
Well, Google has the high-speed cable option. I can't remember the name of it, but you know about that, right? The Google high-speed home internet.
No, I didn't know about it actually, but I'm not surprised because they could have done it a long time ago. But it's I think it's becoming financially. What I was saying was that it's becoming at a point now where it's financially feasible for them to start doing more consumer-based stuff like Amazon.
Yeah, home cable. I don't know what it's called. Yeah. Google. I can't remember what it's called. Oh, got somebody asked a question from Jake. Can you do machine learning to do trading? How about crypto coin? Will it become something big? Yeah, it will. They're already talking about crypto having machine learning enabled. I was just read on Quora about blockchain and machine learning being merged together. So yeah, I think absolutely they'll be that as a new standard, for sure. But machine learning is interesting because I talked to a few people about the application of machine learning and algo trading. I'm not sure if it can be done in price discovery, but you can definitely use machine learning for things like portfolio analysis, portfolio optimization. If you go on ultra high frequency, you definitely can use machine learning for what do you call order book on a sub-second level for sure. I was actually a year ago. My company was one of the lead media sponsors for out of New York with Newsweek, and they gave me an itinerary of all the high frequency trading shops and what they're doing with machine learning. And the funny thing is that the big operators were there, like Two Sigma was there, Goldman Sachs, and they went through all of the course description of what they're doing with machine learning in terms of high frequency. And it was exactly what I was saying, is that they're doing it for order book, simple price discovery, but I don't think price discovery is there yet. But there's definitely a use for it. I've talked to a big publisher, and they've told me that they work with a lot of the big banks. A lot of the big managers in these banks don't really rely on machine learning. They're only doing it to keep people happy. You know, their investors or customers happy because everyone else is doing machine learning. Same with cryptocurrency. But it's just more like pet projects. So they'll have a couple of teams do a little machine project here and there to keep their customers happy, but they don't have a lot of faith in machine learning. Now that could change, but that's what I've been told in the last few months. But I don't know. And don't forget that with these projects, they're not going to go out in the public domain and say, hey, look at me, you know, I'm doing this kind of project in machine learning. But there's definitely an application for it. But think of all the machine learning libraries out there. Yeah, I think, as I said, TensorFlow seems to be the one that's taking the lead on it. So the future looks good, especially when it comes to January with this new TensorFlow version 2. It's pretty exciting. They've eliminated a lot of complicated analysis and whatnot to set up. I don't even know machine learning at all. I don't even know to run your predictor analysis thing to get your results, I guess, in a lame brain way to talk about it. I don't know, but there's definitely an application for it. So you got any other questions yourself, Bill, at all? Or
I was just saying, I think if you look up Google Fiber, maybe that was the thing you were.
Yeah, that might be it. Yeah, that might be it. Fiber, yes. Google Fiber, yeah. Yep, that's the company. Yeah. So they have all these cities already lined up. Yeah. So those are all the cities that they're working on. But it's a very expensive build out. Looks like Jake followed up with, for general user with no access to luxury HFT gadget, how can the machine learning be used? Do you prefer classification or regression model? I'm going to be honest with you. I don't know machine learning. I'm not a expert here on it. I'm just doing simple technical analysis. I played around with a lot of quantity stuff, but I will tell you I'm having some success with the technical analysis stuff. In terms of the HFT stuff, believe it or not, a guy showed me a couple of weeks ago things that he's doing on all things Raspberry Pis, like a $50 computer, because you can run Python on these little computers, and he's able to do quite a lot of interesting things with it. I think hardware is going to be not a factor anymore, and there's going to be more put on the cloud. But I don't know. It's just such a fast moving world right now. You don't even know what. I talked to another guy, just joined my membership. He was telling me with the microwave things that they were setting up for transmitting between an exchange and their data warehouse. I think they don't have to have those kind of investments anymore. I mean, look here, you got Google building out fiber, into your home. And it's still, distance is a problem, but just depends upon, it depends upon how cryptocurrency itself will evolve too, because I wouldn't be surprised with somebody like Binance, where you could just host your own model, whatever, on some kind of location that they'll give you, but more affordable. It just depends. I mean, it's so many changes right now. I mean, it depends where crypto goes itself, because there's so much interest in it. And once the institutional players get in on it, who knows where it'll end up, and maybe hardware might not be a factor anymore. And it's so competitive with HFT anyways. So it's just going to, I think, it's being the next generation of something, but what will that generation be? I don't know.
It seems like your work is, I would call it ad hoc, with lots of testing.
Bleeding edge.
Yeah, bleeding edge, lots of testing is the secret sauce, is you make sure it actually works.
I will tell you this. I really think, to be honest, I think when it comes to simulating and building a model in, we'll call it HFT, if you want to call it that, it could be done in something like a TPU environment, where you have a cloud. If you're willing to pay for a certain set of hardware cores at Google, host the processing algo locally, I think that's something that could be a future. I don't know how they do in AWS, but the next question is, what will the brokers be doing? You know what I mean? Like, where are they going to be hosting their database or their data warehouse? Will it be on a cloud as well? You know, things like that. I don't know.
It's like, what's the golden, who is the Goldman Sachs of crypto?
I would probably, from my point of view, probably Binance.
Yeah. Because
Binance gives you so many advantages. It's so affordable to trade, where it's not a factor. I don't even know where to begin. It's definitely Binance. And they're so innovative that they're bringing out, as I said, these fiat currencies, fiat exchanges. And then I was just reading a few days ago that they're bringing out a decentralized exchange. That's the key when it comes to crypto, because once they bring out something that's decentralized, governments won't be able to control that, because it's just that, it's decentralized. You know what I'm saying?
Yeah.
And think of like, I don't know, are you familiar with Monero or Zcash? If you're not, Monero is, as an example here, I'll show you the volume. When you look at the overall exchange on the cryptocurrencies, say the top 100, you look right here, number 10 is Monero. And even though it's small, people don't know why Bitcoin became huge was because of the dark web. for years, nobody cared about Bitcoin, but it was the dark web that was the standard financial go-to crypto for dark web. Now, because there's so much regulation, they're now using Monero as the new Bitcoin because it's anonymous and it's decentralized. So there's another article that I read about how the North Korean government were hacking into a variety of different exchanges. There was one, it wasn't an exchange, but it was some kind of way to transact your crypto, if it's Bitcoin, let's say, and transaction convert it into Monero. So once they convert it into Monero and they transfer it out with a Monero, they don't know where that Monero is going to go because it's anonymous. And that's what they're saying the North Korean government was, and all these bad actors, governments, that's what they were doing, is they're hacking in, grabbing whatever they could, transfer it into this US-based exchange of something, and then transferred it back into Monero. And Monero is now becoming the new Bitcoin. And you can see Monero just on the volume on just the top 10. Monero is, as I said, in the top 10 because of that. And I think you'll see Monero move up in terms of volume because it's the original vision of Bitcoin. It's anonymous, it's decentralized, and that was what Bitcoin originally was. And Monero is becoming, so a lot of development is being put into Monero. And then there's another one called Zcash, this one right here, which is the same principle as well. But Monero is the one to watch. You got any questions, Bill?
My brain is full, man.
I hope it doesn't drop out.
No, that's topped off now.
Jake asked, exactly decentralized exchange should be done long ago. I think the crypto community lacks the steam to move ahead quick enough. That's not the case, Jake. When you look at, we were talking earlier, I'm not sure when you joined, but Binance is already there, to be honest. You can fund the account anonymously, and they support over 300 cryptocurrency pairs. So it's pretty powerful as an exchange, and it's anonymous. And yeah, it's very powerful opportunities out there in terms of a decentralized exchange. Because as I said, when you look at the volume here, as I was telling Bill and others, Binance right here is number one. As it's exactly what you're asking about, decentralized, or it will be decentralized, and it's the largest as well. And you can fund your account anonymously. And it's out of now Malta, originally out of China, but now operating out of Malta. And I think that's one of the primary original goals when they started out. They wanted to keep everything anonymous. So, yeah. Oh, actually, the other story about the guy was Eric Voorhees. It was his company where all of these weird transactions were. That's it. The company is called Shapeshift. So money from North Korea, wherever it hacked, would be transferred into the Shapeshift, and they would be transferred into Monero. Yeah, that was the company Shapeshift. And if you want the article, I think it was on Forbes, if I'm not mistaken. I can't remember where the article was. Maybe it was Bloomberg. It was one of the two. Very interesting story. But yeah, that was the guy's name for the Monero. So we're setting up an exchange, or sorry, a crypto for what Bitcoin was originally when it came out 10 years ago. It's pretty exciting. And then Binance is also anonymous as well. And as I said, they are supposedly going, they will be going private soon. So Yeah, it's a huge future. I mean, there's a lot of potential here. Anybody else got any questions? Been going 2.5 hours. If you guys got any questions about trading or algos or programming, whatever, just chime on in. So I know on the YouTube, it's about a bit of a lag. But interesting conversation, guys. If you got any other you want to ask Bill, just let me know. Or Jake, whoever else is on there. Go ahead.
Next week I'll let you know. Maybe next week I'll have more questions.
Okay. Yeah, or just email me. Might be best.
Okay. Cool.
All right. Oh, no problem.
Thanks again. This is really great stuff. Thank you.
Oh, no worries, man. I hope you got some stuff out of it. And yeah, thanks for coming out and hanging out, I guess.
Oh, yeah.
And same with you, Jake, and whoever else is online. Yeah, this is a good session tonight for me. Appreciate everybody coming on out. If anybody else, I'll do it going once, twice, 3 times, and then we'll just wrap her up. So do it going once, going twice, going 3 times. So we'll say good night or a good day wherever you are. Thanks for coming out, and we shall do it next week sometime. All right, guys, thanks again, and have a good evening. All right, thanks.